Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10 o'clock, markets giving up its winning streak, down marginally. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar, as well as crude oil. So Sensex is down about 170 odd points, 79,830 is the level on Sensex. Nifty is down about 40 odd points, 24,280 is the level on Nifty spot. Bank Nifty down about 195 points, 52,445 is the level on Bank Nifty. And Rupee Dollar equation, little bit of strength of 0.03 paise on Rupee against the dollar, and the level is 83.45 rupees to a dollar. On Brent and NYMEX, that is crude oil, elevated levels but marginally down. Brent is trading at about $86.42 to a barrel, and NYMEX is trading at about $82.93 to a barrel. On Rupee Dollar and crude oil, well, crude oil a little bit difficult to give any kind of decisive levels because of the geopolitical situation and the capability of those geopolitical news flows pushing the crude oil prices on either side. So let's hope that there is no adverse news flow from the Middle East so that we see a little bit of cool off on crude oil. So one can expect a little bit lower level from here on as far as crude oil prices are concerned. And on the Rupee Dollar equation, I think we have been time and again giving you an advice of 83.50, 83.60 as a weakness level, wherein after touching those levels, we can see some amount of strength coming back into the rupee. And that's what exactly has been happening. So one can expect levels of somewhere close to about 83.30, 83.25 rupees to dollar. So that means effectively some strength being displayed by rupee against the dollar is what our estimates are. And of course, now on the markets, well, I think after making a new all-time high last week, we are seeing a little bit of pullback. Last week's trade, if you actually go to see on Thursday and Friday, we started off on a positive note on Thursday and then cooled off. On Friday, we started off on a weak note, but we managed to recover the lost ground by the time we ended the trade on Friday last week. Marginally down this morning. Expect some kind of buying coming in at lower levels. As far as the FIs are concerned, well, they have been living in the FOMO factor, and that's what is propelling FIs to put in money and support the markets as far as the downside is concerned. And even the domestic institutions have been actively buying into some of the themes that they believe are growth oriented as and when these kind of corrections come in. So broadly, the range could be in the range, if you ask me for the Nifty spot, well, 24,100, 24,200 on the lower side, 24,400 to 24,500 on the higher side. Last week, friends, when we were in conversation, we had given you two levels. On the higher side, 24,200 and 24,500. We missed the higher level of 24,500 by about 100 odd points. 24,400 something was the all-time high that we saw. And on the lower level that we had given out on the Nifty was somewhere close to about 23,800, 23,700. Now that the momentum is on the higher side, we expect the continuity as far as the upside is concerned for the markets to be in place. But there will be days of profit booking, there will be consolidation, there will be days like what we saw last week on Thursday and Friday. We open up on a very strong note, but we give up all those gains by the close of trade, or we open up on a weak note and then recoup all those lost gains. Or it can be trades like in very choppy and volatility throughout the day, or spillover of profit booking for 1 or 2 days. But with the kind of buying that is visible on the screen, we expect that 24,100, 24,200 could be held out in terms of buying support on the lower side. In terms of triggers, friend, well, we will see curtain raiser for the first quarter earnings this new financial year, that is FY25. TCS will be the one that will do the honor for raising the curtains for the first quarter earnings, and then the rest of the pack will follow. We expect IT sector to do a little bit better. Sentiments could be on the positive side, and in fact, the IT index has been holding out quite smartly. If you actually go to see over the last week, 10 days, there has been some buying coming in, and there have been some statements also that maybe the worst for the IT sector is over. So let's hope the numbers tell us the similar story. In terms of crude oil prices, as already mentioned, one can expect $80 on NYMEX and somewhere close to about $83, $84 on Brent. This subject to the news flows being supportive on the lower side. And of course, on the monsoon front, there has been deficit for the month of June, as we all know. But let's hope that the month that has begun on a positive note, July, does make up for the deficit in the month of June. And of course, the progress is something that we'll surely be watching out very keenly. And the most important event, friends, in the immediate short term is the budget. As we all know, 23rd July is the budget day. And again, like all years, we have expectation building up. But there is very limited scope for the Honorable Finance Minister, Srimati Nirmala Sitharaman ji, to oblige everyone. According to us and according to what we've seen in the last many budgets that this government has delivered, it is going to be a budget which is going to be growth oriented, employment generation, and a budget which will pull up the level of living as far as the common citizen of India is concerned. And along with that, of course, certain policy changes, certain focus will be there, like defense, infra, power, railways, etc., where there is going to be the need of hour in terms of policy changes, and of course, giving respective budgetary allocations. So this week, friends, broad range 24,100, 24,200 on the lower side, and 24,400 to 24,500 on the higher side. There is a possibility wherein we could see a breakout of the higher side, which will possibly propel the markets to the next level. Thank you very much for your patience hearing. And before I say goodbye to all of you all, as always, we give you two investment ideas. And these are, of course, from a long-term point of view on the fundamental side. The first one is from the auto ancillary tire manufacturing companies, Apollo Tires. We've seen good traction as far as auto ancillary OEM segment companies are concerned. And supportive is the launches that are lined up by various automobile manufacturing companies, two-wheelers, three-wheelers, four-wheelers, commercial vehicle manufacturing companies. And along with that, supportive rubber prices and repeat and new order markets, which look extremely robust for the tire manufacturing companies. Approximate targets for Apollo Tires, keeping in mind the futuristic earnings, could be somewhere close to about 625. These are approximate targets, will get revised depending upon which way the earnings go. And the next one is from the banking pack. A relatively mid-sized bank, if you will, Indian Bank, has been showing extraordinarily improvement in the earnings. And on those earnings and futuristic earnings, we believe banks overall will see a phenomenal growth. We've also seen the business update from some of the NBFCs, public sector bank and private sector banks, which tells us that the growth is likely to stay for a longest period of time, and credit demand is something that is going to be at an elevated level. So Indian Bank is the second one. Targets of somewhere close to about 620. Here again, disclosure, a caveat. In case if the earnings are in line or better, then the targets will get revised accordingly, depending upon which way the earnings go. But these are approximate targets. Staggered buying is advised. Don't put all your money at one time. Start at these levels, and on dips, you can definitely add to it. But please bear in mind, these are long-term investment ideas. These are not BTST or short-term, medium-term trading ideas. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.